When you trade, I'm sure you look at a trend to know when it's a good time to buy or to sell, but you actually look at the strength of that trend to improve the timings of your entries and exits. Well, today we're testing easy ways that will help you do just that. We're going to use a very simple toy example, a textbook strategy where we consider the crossing of two exponential moving averages, a slow one of 30 days and a fast one of 10 days. Generally, when considering crypto, you use shorter averages than standard stocks. That's why I'm using a 10 and a 30-day exponential moving average. So we will make some buys when the fast exponential moving average is above the slow exponential moving average, and the opposite for the sells. On top of this, we also consider a trend filter, a 50-day simple moving average. And basically when the price is below this filter, then we're only allowed to do some shorts. And on the contrary, when the price is above this filter, then we're only allowed to do some longs. A nice and easy reference to do our testing. To this, I added two other indicators, the CCI, so the Commodity Channel Index. This measures the difference between the price and its historical average. And the second index is the RSI, so the Relative Strength Index. And this compares the strength of the asset on days when the price goes up to days where the price goes down. So what are these two beasts and why are they important? Well, they're both momentum indicators. So that means they won't tell you where the trend is going, but they will tell you how strong is that trend, whether it is up or down. You can see that the CCI and the RSI tend to look quite alike. They're both oscillators, so that means that their values varies between two close ranges. And the key feature that they give you is that they tell you when the asset is in an overbought or an oversold region. So the common values for the CCI is that if the CCI is above 100, that means the asset at this point is in an overbought state. While when it is below the minus 100 line, then it is in an oversold state. And similarly for the RSI, the overbought region is said to be when it's above 70, and the oversold region when it is below 30. These threshold values could be changed, but I am sticking to the common values here. If we take a closer look to these two indicators, you can see that sometimes they do agree on the overbought region, but for example, this range is much shorter than the one given by the RSI, and the same for the oversold. It coincides, but the range is different. And you can see that, for example, here, the CCI would have told us that it is in an overbought, but for the RSI, that wasn't the case. But what is important to remember is that generally when an oscillator tells you that the asset is overbought, this generally coincides with a pump in the asset value. And on the contrary, when there's a trough in an oscillator, this coincides with a dump in the price of the asset. So how can we exploit this? Well, here's an easy way of doing it. We know that when an asset stops being overbought, its price generally starts dropping. So we might as well wait for that to make a buy. And conversely, when the asset stops being oversold, the price goes back up. So we might as well wait for that to make a sell. So first, let's run a backtest on our toy example, and then compare that to a backtest where we put these conditions with the CCI or with the RSI. For the specs of the testing, we will keep it simple. We will trade with 100% of a portfolio of 1,000 USDT, and we will consider trading fees to be of 0.1%. By the way, if you want to trade with reduced fees, you can use our registration link on KuCoin down below. It will give you a 10% discount. Okay, let's add the strategy to the chart and see what the results are. So this toy example gives us a bit more than 2,600% profits by doing 42 trades, so more of a long-term strategy than a high-frequency one, and a win rate of 42 to 43%. That's quite normal for a trending strategy like this, and a maximum drawdown of 45%, almost. Okay, so we have our reference strategy and its results. I'm not saying go trade this strategy. I'm not a financial advisor, and trading can be risky, but it is a good example for our test today. So let's add our CCI and see what happens. You can see that I've modified the code to add the conditions with the CCI. So that is only do a buy when the CCI is below 100, while only do sells when the CCI is above minus 100. So let me save and it will update the strategy. And you can see that unfortunately we had a big drop in the profits. The number of trades remained roughly the same and the win rate actually increased a bit. This is a good example that win rate is not always the most relevant for profits. And with the loss of our profits, also the maximum drawdown increased quite a bit. I think we can say that the CCI didn't do very well. I think what happened is that it actually filtered out too many good trades. So let's see how the RSI does now. I've now amended the code to consider the RSI conditions. So this time is only do the buys when the RSI is below 70 and only do some sells when the RSI is above 30. So let me save and we can see the new results. So we have improved quite a lot with respect of the case of the CCI, but also with respect to the case of the toy example. And we have the same amount of trades than in our toy example. The win rate is the same and the maximum drawdown decreased a bit. So what happened here is that because we had this condition to wait a bit to do either a sell or a buy, well, we didn't change the number of trades. We simply waited for better timing. And that's why we managed to increase our profits, which in turn also decreased our maximum drawdown. So I think in view of all these results, I think we can say that within this framework, the RSI proved a better optimization for the trading strategy. Let me know in the comments below if you have experience with the RSI and the CCI, and if you found cases where the CCI actually did better than the RSI. I'd be curious to know. Thanks for watching. I hope you enjoyed. Don't forget to hit that like button if you have and subscribe for more content. If you want to support me in creating some more, you can make a donation on buymeacoffee.com. In the meantime, I think these could interest you. As always, take care